Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of December 16 to December 20, 2024. Let's dive into what to expect in the upcoming week. This week unfolds amidst heightened market speculation as key central banks prepare to make significant decisions in the coming months. With the Federal Reserve expected to implement a rate cut next week, attention is already shifting to the possibility of a pause in January, which could have implications for the US dollar. Meanwhile, the Bank of Japan faces uncertainty regarding its planned rate hike, and the Bank of England's cautious stance on rate cuts continues to support the pound. Investors are bracing for critical signals from policymakers in the US, Japan, and the UK, as the global economic landscape remains in flux. Despite Wednesday's data indicating slightly higher U.S. inflation than in October, market participants are almost certain that the Fed will implement a quarter-point rate cut next week. However, the likelihood of the Fed taking a pause in January has surged to around 80%. This shift in expectations follows remarks from several policymakers who, while supporting a rate cut at the upcoming meeting, emphasized the necessity of a more gradual rate reduction path in the future. With a 25 BPS cut anticipated next week, markets may be more focused on signals about a possible January pause and the number of rate cuts expected in 2025. Fed fund futures suggest an additional 50 BPS reduction by next December, raising downside risks for the US dollar. Investors are increasingly considering the possibility of a pause at the year's first meeting, given the strong likelihood of next week's cut. This scenario could weigh on the US dollar, especially if the Fed signals a slower pace of rate reductions moving forward. Until recently, investors anticipated a 15 BPS rate hike from the Bank of Japan, with a 60% chance for a quarter-point increase. However, this probability dropped to around 25% after board member Nakamura suggested that any decision should be data-driven, dampening hopes for an end-of-year hike. Despite this, traders are nearly fully pricing in a quarter-point increase by March. Governor Ueda and his colleagues have signaled their readiness to hike again due to the expanding economy, rising wages, and above-target inflation, keeping market speculation alive. Last month, the Bank of England reduced the bank rate from 5% to 4.75%, but raised inflation forecasts following massive government spending announced by Finance Minister Reeves. Governor Bailey's recent remarks that there is still a distance to travel have led investors to expect no further action before year-end and around 75 BPS worth of cuts by the end of 2025. This relatively hawkish outlook has supported the pound, making it the only major currency to hold its ground against the greenback in 2024 and outperform the euro, as the ECB is anticipated to cut rates by another 115 BPS in 2025. Additionally, Trump's tariff threats pose a risk to the eurozone and the common currency. This week has seen pivotal developments that could shape the outlook for major economies in the coming months. The Federal Reserve's anticipated rate cut and the possibility of a January pause have shifted market expectations for the US dollar. Meanwhile, uncertainty surrounding the Bank of Japan's rate plans and the Bank of England's hawkish stance the challenges facing policymakers. As global markets navigate these shifting dynamics, the outlook remains complex and evolving. Stay tuned as we continue to monitor these trends and their potential impact on economies and investors alike. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.